Good morning, everybody. It's Monday, May 13th. This is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn down a quarter at 469.5. July soybeans were down 4.5 at 1214.5. And July Chicago wheat was up 4.5 at 668. Good morning, guys. Hope everybody had a great weekend, and happy Mother's Day to all the mothers out there. We had a little bit of excitement there on Friday, honestly, on the heels of the pretty friendly report for corn. Dustin, I know we've had the weekend to digest our thoughts and take a look at really what this means for our path going forward. So I figure kick it around, a few thoughts here this morning, and then we'll move it around to the rest of the guys here.
Yeah, thanks, Dan. Yeah, this was definitely very encouraging, to keep a trendline yield that the USDA had in Feb, just a little bit of demand increase, and then still come out with that type of a carryout, I think was, the market just took that as a reminder that it's not necessarily an easy path to abundance like we've had projected prior to this. And then, planting delays. That's another thing that's not been like just a perfect start to the season. So I think the market is still trying to consider what is a good weather premium to put into the price of corn, going into the season. I think beans, they have completely the opposite story. They're going from very tight to a much bigger stocks to use carryout. In terms of percentage of carryout, that's moving to be a very abundant one. And so it wasn't surprising to see the corn bean ratio do what it did, falling. And I think it's kind of sets the stage up for why we're seeing a typical seasonal rebound right now.
That's very good. And also we did get data commitment of traders after the close. I know you always reference it being from Tuesday to Tuesday, but a significant short covering in the corn and beans. 111,000 contracts of beans and about 119,000 or so contracts of corn.
Yeah, so you think about this. I mean, that was as of Tuesday, and we had some favorable data and new highs on Friday. But just that number of corn contracts being liquidated. You can see, if you see the same thing again this week, which it's not typical to see that size of a position transfer in a single week. But if you could see the same thing, they would be net long. That's how fast of a move this is happening right now. And if you were looking like who's taking the other side, it's all fresh producer merchant shorts. So all of those sales, I think we've talked about this a lot. I think there's been a lot of wind out of the sales of growers here. And if it's like, this is going to be our price, let's start selling. We're getting closer to $5 again. There's been a significant amount of shorts being added at the commercial, both old and new. So I think it could be the position transfer that we're talking about. It's happened already. And we're going into that seasonal time frame. End users still making money at this price. And there's a question about the path to carry out.
That's very good. Ben, a couple of thoughts from the East here this morning.
Yeah, I concur with everything that Dustin mentioned. And I think that the bean market in particular, they had a catalyst that was a real uncertainty with what was going on in Rio del Sol, a dam breaking, flooding. Everyone knows the story now, and how violently they moved in a covering move. And it came out pretty quickly. And, that was not really the same sort of catalyst in corn, but we did see covering. The bean market to me looks to be, they've taken a lot of the edge off, which percentage wise was a very large short. And entering into this phase, you have to see, we put some work in that was before all of that. And we were able to get a little bit of footing under us in corn and get above some moving averages. It took a lot, above the 100-day kind of sets in motion some covering. The 200-day is just above the market, around 94 in December corn. Would be interesting to see if we can generate some more short covering above that. So just, going at this with a lot of humility, seeing things happen that need to happen, or that would be, optimal in our minds, and, look forward to seeing how this trades out over the next 5 or 6 weeks. We're in that period of uncertainty where the balance sheet can move tremendously, unlike October through, March, April, outside of massive export programs. So, which we really didn't see, although corn has been very steady. So, you go into this with let the market tell you what it wants to do here, I think, and be prepared to execute things that make sense for the individual.
That's very good points. Justin, good morning. We kind of started talking a little bit on Friday, and there's more stuff circulating this morning, but the Biden administration is expected to release a list of tariffs on Chinese imports sometime at the beginning part of this week. And there's been chatter that cooking oil could potentially be on that list. We did see a pretty sharp spike on Friday in oil. So just, I guess, maybe a couple of thoughts on what could potentially be coming down here.
Yeah, good morning. The rumors on Friday were that, they would potentially change import tariffs on used cooking oil from 4 cents a pound, I think, to 19.5 cents per pound, which would be a big deal for the soybean oil market. We've obviously talked a lot about this, the unintended consequences of, this whole renewable biodiesel movement and subsidies, is that inadvertently we have priced soybean oil, to compete with used cooking oil, right? So instead of being this, kind of the diamond of the group, it's trying to price itself as the cheapest fats and oil component, which makes sense. If you're someone trying to make biodiesel, you buy the cheapest thing. Obviously, a lot of shenanigans sounds like going on where, is it used cooking oil, or is it just packaged that way from the Chinese, just being, palm oil, making that arbitrage. So either way, that was the rumor. Soybean oil had been beaten relentlessly down. So to be up, 2 cents a pound was, pretty easy for it, with throw a little rumor in there too. But that's, I think, kind of highlights, Dustin's brought this up multiple times about, just the risk of, political, announcements. I mean, if you start throwing a bunch of tariffs on top of the Trump tariffs on China, they're our biggest buyer of some of these products, most notably soybeans. And I think soybeans have a big problem here. I mean, we're looking at a 450 carryout, with a very generous demand assumption of 250 million bushel increase in crush and exports, with another record South American crop. So, not going to sugarcoat it, soybeans look super burdensome to me. And if you're, we've looked at it over the weekend, digested it, I think corn's kind of friendly, and you can, I've seen a lot of people on social media, kind of beaten up, like, why would you be friendly corn? And, there's too much. I think there's just better things to sell than corn. And relatively, corn looks very undervalued, in my opinion, to the soybean complex. So flat price is always tough. And, like we've talked about, funds, about hundreds of thousands of contracts in the last week. It's going to move prices, anytime that happens, or if they want to continue, it can rally flat price a lot more. I think relatively, you have to look at some of those relationships, and, corn just seems like a relatively cheap when, wheat's $2 over and soybeans are still 2.5 to 1. So I kind of look at it more as just the price relationship.
Yeah, that's good. Ben, you look inquisitive. You got something to add there?
Yeah, I think what Justin said is spot on. And when you look at historically how corn behaves with wheat, especially when it comes out of the Black Sea region, it has a little bit of a lag. I'm not saying that it's an explosive commodity by any means, but it does take a little bit of time for that to filter into the corn market. You can look back at years 2010, for example, when we had an issue over there. and it took a little while, but then corn kind of came on and got with the program. So I think that's worth keeping an eye on and monitoring. This is also we're in a situation now where we're getting inside the window pretty soon here for soft red wheat harvest, which should come a little bit early, especially if it dries out. So I think that there's some positives here for corn, and I don't think that the grower is going to get squeezed to the degree that they did last year, right? They went into this with a really dry, last half of May, June. We rallied really strong. We had the largest 7-day percentage decline in the history of the corn contract. And that left everyone, I don't want to say everyone, I don't like generalities, but it left a lot of people wildly undersold in the most expensive crop that they ever produced. And I think that was fed from really good years of margin, getting away from a good disciplined approach. And I don't think that is going to be the case this year. So, is the new paradigm for corn, the low being $4 and we're in a range, or did we inadvertently pressure the grower because they were with such a well-publicized story to make it even worse? So I don't think that the grower is going to have the same liability going into the critical growing time that we had last year. So, I think that also is a factor of recency bias. It tells us that, we're going to go back down there, and, maybe that was a little bit of an outlier of a price like we have seen before.
Yeah, and Ben, just to add to that too, I keep hearing the comment of the farmers way longer than the funds are short. It's like that's such old news.
Yeah.
In my opinion. I mean, that was the story in, December through March. And that's why the market had the break that it had. I think that's been hugely cleaned up. And Dustin alluded to this. This is the change of ownership that we've been kind of waiting on. Right. I would say the market's pretty balanced here. It says it on the charts. It says it on the commitment of traders. Anecdotally, we know how much farmer selling there's been. So now it's kind of like a fresh start, and let's see what the market does from here. And Ben, you kind of alluded to it's all the things are kind of lining up where it's kind of where it should be, in my opinion, going into a growing season. There's equal risk in being long or short, market going up or down from these prices. So it should be an interesting to see how we play out, like you said.
Yeah. Well, and I think that if you're looking at it from a broader perspective, with what happened in the soybean market, when there is a true fear in some way, how violent a short covering rally like that can be. And, should we see something like that in corn? I think that there's nothing that says, with X carryout that managed money will or will not get long. They view it as a risk proposition. And someone once told me that a managed money, someone who's managing a commodity, they won't get fired for losing 30 or 40 or 50 cents. They'll get fired for missing a $2.50 or a $3 move. So, if they take the bias that, hey, you know what, for this growing season, we might take a crack, I think it would be really a great opportunity. But again, they may be right also. So I think that when you construct your plan or your strategy around that, I think that's a pretty important consideration.
And Nick, from what I'm hearing, the question was when will we know if tariffs include used cooking oil? I'm hearing that the administration was supposed to release a list here early this week. So I don't have specific day or time, but I'm sure when that comes out, it'll be, that list will be well publicized. So we'll be sure to pass it on there. I don't know, unless anybody else has heard differently, but that's all I got on that piece.
No, again, I don't know. Just saw the rumors circulating on Friday and over the weekend, but nothing really concrete. So I don't know how they came out with 19.5 cents. It's very specific. So, sounds good. I mean, I'm all about it, but yeah, it's a good question.
Rylan, we're just coming into the open here, but I know there was a story over the weekend that 70 dairy farm workers were potentially being monitored for bird flu. Any updates there? And then what are you thinking for cattle here as we start the week?
Yeah, Dan, I mean, the story has been circulating for a couple a couple days now, that these apparently.
Wow.
Well, we had technical difficulties, so we'll get back with Ryland when he reappears in the stratosphere. But we just came into the open. July corn is up 3/4, 470.5. July soybeans down 2.5, 1216.5. And July Chicago wheat is up 10 now at 673.25. Ryan, we'll give it one more shot here, buddy.
Yeah, sorry, dude. Yeah, so they're apparently these are non-symptomatic cases. So, but it is back in the news as we see 70 farm workers, and this is out of Colorado. They're being monitored for symptoms, but nothing's known right now. It doesn't seem to be, it seems like it's a nothing burger. I only saw 2 outlets really picking it up, but I think more focus is just going to be on kind of how the market's positioned going into this time of year. The USDA, the WASDE report didn't really change, I think, any of the psychology of where anything's at right now, just with their projections. Maybe a little bit of concern. I think longer term, the beef supplies are projected up 1% versus last year. Is a little bit of a surprise just based on how high cattle weights have been. But, I think that's more of a let's wait and see how this goes kind of mentality. Cash prices were steady last week and managed money still carrying a long position, about 3,600 contracts. They did buy 3,300. So it looks like there's maybe a little bit more confidence coming back that we could see some seasonal appreciation, but the beef market's just been fighting everybody at every turn. So we're just not seeing the big seasonal right now. Maybe that's going to change with the weather. And I think that's what everybody's kind of waiting to see. So it seems like, probably just see some more of this kind of choppy action just for right now.
Very good. Appreciate that.
We just made 9-month highs this morning. So,
there you go. Yeah, July up 12 now, 675.25 is the last. Holy smokes. A couple administrative things. We're going to have crop progress out at 3:00 Central today, so we'll discuss that tomorrow. And then CONAB will be out tomorrow morning as well, so we'll get some South American updated estimates. As always, every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central. Appreciate all the thoughts and comments this morning, guys. It was a good conversation. Hope everybody has a good start to the week, and we look forward to talking to you tomorrow morning.
Thanks, Dan.